Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario where we're looking for a 5-wave impulsive structure to the upside in the green wave 1, followed by a 3-wave corrective structure to the downside in the green wave 2, after which we want to see strong impulsive continuation to the upside in a bigger wave 3. Now this scenario, proposed by ThoughtDrifter in Discord, then counts an internal 5-wave impulsive structure inside this blue wave 3, where preferably the low of your wave 4 is already in over here, because what we don't like to see is overlap between the end of wave 1 and wave 4 inside a wave 3 in blue over here. It doesn't matter if price continues the range over here, it's already hit the common target area for a wave 4 anyway, which is the 236 to the 05, and you can see here the 382 to the 05 area is nicely respected. It's just that we don't like price to move towards the downside and hit this low before taking the high, as that would invalidate this scenario. Now in this scenario, wave 3 is also longer than wave 1 in price, which is a minimum requirement for wave 3, as wave 3 can't be the shortest wave between a 1, 3, and a wave 5, and the fact it is already longer than wave 1 means that rule is respected. Now because wave 1 and wave 3 are quite similar in length, it does give a wave 5 a little bit of probabilities to at least be a potential extended structure and therefore be extra long. However, we do have some resistance right above price, the blue box here, between 68.2k and 69.2k. The second bullish scenario, which is the most bullish scenario, is a triple 1-2, 1-2, 1-2, 1-2, and eventually we expect a very big high volume impulsive move to the upside, where we are looking for a straight line to the upside, which of course is very different compared to what we see here, where preferably we're going to continue this range for a little bit longer. In the triple 1-2 scenario, we have our first wave 2, which is our highest degree wave 2 in green, retracing to the 0.382 Fibonacci taken from the low to the high of 1, which is an uncommon target for a wave 2, but a target nonetheless. Inside the green wave 3, we have the blue count 1, 2, 3, 4, 5, and this wave 2 retraced to the 0.5 taken from the low to the high of 1, which is a common target for a wave 2. In white, which is a subdegree count of the blue wave 3, we then have our wave 1 finished, and here we have the wave 2. Now potentially, of course, wave 2 can be finished, it works time-wise at least, but we did hit the 382 again, and not actually the common target for a wave 2, which is the 05 to the 786 area, taken from the low to the high of this wave 1. And the fact that currently we have two 382 bounces of the green wave 2 as well as the white wave 2, it does impact the probabilities a little bit for this scenario compared to the other bullish scenario, but the follow-up is most important. A very big impulsive straight line up, or are we going to find resistance and range a little bit longer, right? The invalidation for this scenario is price moving towards the downside below this wave 2 over here. That is not what we like to see, but in this scenario it is no problem to take the low of this low over here, right, and find some support in this area if price does move towards the downside. Now the probabilities locally are higher to sooner or later take the highs, not only because of the two scenarios over here that have a higher probability compared to bearish scenarios, but also because we touched the 886s. So the first 886 here, taken from the high to the low, increases the probabilities that any move to the downside coming after the 886 is a wave C or a wave Y, or at least a corrective structure, increasing probabilities to take the highs sooner or later, because the 886 is a common target for a wave B or a wave X and rare for a wave 2. So therefore also here this 886 taken from the high to the low increases the probabilities the move to the downside is corrective, not impulsive, which in turn increases the probabilities to move towards the upside sooner or later. Now the local range that we're in right here has a higher probability of being corrective because of the 886 touch, but it's quite interesting to think about the probabilities to take the highs first or potentially the lows first, and that is where this box comes in here, as what I like to do when I analyze my chart is go through the different scenarios, different corrective scenarios in this case, and just have a look, hey, what are the probabilities per scenario, and then eventually what are the general probabilities when you put everything together. So when we go through them one by one quickly, the first one is a zigzag 1, 2, 3, 4, 5 in the wave A, then you want a 3 wave B and another 5 wave C to the downside, invalid validation is taking the high. Now, if we can count the 1, 2, 3, 4, 5 to the downside ending over here, then wave B, not being allowed to cross the high over here, needs to be a running flat. So we have a wave A, a wave B, and eventually a wave C ending over here after a 5-wave structure where wave C did not take the high of wave A. But that creates a running flat, and a running flat is very rare, never preferred unless all of the other stuff fails. Then we have a potential flat structure where we then need to count this move to the downside as a corrective structure for a wave A, and then we're looking for a wave B and eventually a wave C. Now in a flat, preferably, wave B takes the high of wave A, because an expanding flat where the target is above wave A over here is the most common flat pattern. However, in this particular scenario, we didn't yet take the high, and price not taking the high leads to a potential regular flat, which is uncommon. So therefore, preferably, price first takes the highs before eventually moving down to the lows in this scenario. Then we have a WXY, where if this is your wave W, we're eventually looking for an X and eventually a wave Y to the downside. But if this is a finished W, it has to be a zigzag structure, which for wave Y only gives probabilities for wave Y to be a flat or a potential triangle, because in a sideways double combo, if W is a zigzag, wave Y cannot be a zigzag anymore. So in this particular scenario, if we are looking for a finished W, potentially a finished X, and then a Y, we would be looking for a flat preferably, meaning you take the highs before eventually the lows, or a triangle, but in a triangle you're also not planning to take the lows before the highs, as you're planning to continue ranging and then move up, taking the highs first before the lows. And then finally a triangle in its completion, meaning an A, B, C, D and eventually an E before continuation, has low probabilities because wave B here looks very much impulsive and not corrective. So when we combine these different ones together, you can see that the probabilities to take the highs are higher than take the lows. It's always probabilities, but first taking the highs has a higher probability in this local range compared to first taking the lows and the highs after. It's all probabilities, right? That's what we trade eventually, but this is a way to analyze this local range over here. A WXYXZ, by the way, a bigger sideways corrective structure, is a very rare corrective structure and never preferred unless all of the other stuff fails. When we look at these CVD divergences, we do have some bullish CVD divergences here at the lows, right? Higher low in price, lower low on the CVD, target is this high. And here more locally, we have a higher low in price, lower low on the CVD, target is this high. And you can also see we have a bearish CVD divergence, we have a lower high on price and also a higher high on the CVD. However, we do have to think about the context and also Elliott wave probabilities. We hit an 886 here, hit an 886 here, and we have some bullish CVD divergences as well. Also Elliott wave wise, probabilities are higher to move towards the upside, either directly or first down and then move towards the upside. So with that context in mind, I personally feel a lot more comfortable looking for upside instead of downside. And that leads me to the probabilities, where the probabilities on the 1 hour are the highest for this scenario here, even though the 1112 is very, very close with probabilities compared to this one. It does look a little bit better because in the 1112 we have this wave 2 hitting the 382 and this one hitting the 382, and it remains an uncommon target, but it all depends on the follow-up, because if we do move towards the upside after a 1112, you eventually look for a very big impulsive move to the upside. You want to see a straight line, volume increasing, while in this scenario here, you're looking for a controlled move up, finding resistance, continue to range again, and eventually a bigger drop towards the downside. On the 15-minute time frame, what we have over here, the probabilities are higher to take the highs sooner or later. We have two 886 touches as well. And once we take the highs, we do observe the reaction to see if we get continuation and hit resistance. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.